Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. The market makes a fresh attempt to head towards fresh record high levels. The Nifty trades in a 50-point range above the 10,440 mark. HDFC Bank says it will raise 24,000 crore, one-third of which will come from affiliate HDFC, which in turn is also raising 13,000 crore. Edelweiss Group will acquire Religare Securities business, helping it become the country's largest wealth management company. And the Senate passes the US tax overhaul, placing Donald Trump on the brink of scoring his first major legislative victory.
Let's see how markets have done today. As Navneet has just mentioned, we were almost there, but we haven't been able to achieve it. 10,490 is the level that we have been watching for since morning. That is the previous swing high, but looks like there is some pressure that builds up, whenever index gets closer to that. But we have done quite a bit over last 2 days, so a little breather won't really harm us. Look at mid cap and small cap. They are doing much better. What's interesting, there is some sector rotation. There are some stocks which continue to move up, like some stocks on agri theme that we'll talk about later. While market is also trying to identify some of those shares that were consolidating, and they are now moving up with good volume. So there is a decent bit of rotation as well after a long period of consolidation. Looks like mid cap is all set for a much longer inning, because remember, mid cap has crossed 20,500 for the first time, and mid cap index is in fact hitting new highs ahead of the index. But look at the index now. This picture hasn't really changed. Even in the morning when markets opened, we were at almost 50-50 kind of a breadth so far as the Nifty stocks are concerned. Not much change in that picture. If you look at ONGC is moving up on the favorable broker reports and higher targets that analysts are now looking for. You have metals doing a tad better. So Hindalco is a key gainer today. Capital goods is also a significant outperforming sector today, led by L&T on the negative side. You have iShares, which is corrected, and also Tata Steel, interestingly, has corrected after announcement of fundraising and also expansion. HPCL, Ambuja, so that's a mixed bag so far as the losing pack is concerned. Let's look at how the market is really looking, how some of the key movers have contributed to the performance today. ICICI Bank leading with L&T, Infosys and ONGC. So these are active on the positive side. On the other hand, you have HDFC and Kotak Mahindra. So interestingly, you have three banks which are actually on the negative side, while ICICI is the only one which has moved up. But net, market breadth looks decent. We can say two stocks have moved up if there is one loser. So two gainers, one loser, which actually tells you the story. So maybe index is taking a breather, but there are good number of stories that traders are really watching. And let's have a look at some of those stories in today's trade, if you see how some of the active mid caps are doing. But first up, we have PNB on the radar today, because the stock has corrected quite a bit. In fact, the shares that were issued in QIP have come into market today. So that could be the reason, because of the supply, the stock is depressed. But real estate is a leading sector. Look at IB Real, look at HDIL. You have Jan Irrigation that continues to move up in today's trade as well after last two sessions. Future Consumer is doing well. Ashiana Housing is another mid-cap stock which is in focus after ICICI mutual fund bought around 23 lakh shares in yesterday's trade. Look at it today. Stock has moved up with decent volumes, quoting close to day's high even now. A lot of action in some of the PSUs, especially telecom PSUs. So look at Bridging Corporation. Well, this is an infra PSU really, but look at MTNL. Look at ITI. Both these stocks have moved up. There are expectations of turnaround, or there are expectations of ITI turning profitable soon. So these are some of the themes that market is trying to play today, Navneet.
Right, Pradeep. In fact, the activity that you see in the markets remain sideways, but once again, you've got the broader markets which are outperforming. Even if you look at the cues from the futures and options market, so far, the good news has been that the volatility has cooled off. So India VIX today has, it's very close to that mark of 12. So watch out for that. At least below 12.5 was the level when majority of the derivatives analysts said for markets to scale higher, it has to fall below that mark. But in terms of options activity today, we've seen call strikes like 10,300 and 10,400. They've seen some unwinding, which is telling you the call writers of these strikes have run for cover after markets have scaled higher. The 10,500 call strike, which sits with maximum open interest for the series, has also seen a bit of open interest addition, but it is the 10,400 and 500 put strikes which have added over 10 lakh shares so far. And in fact, if you go by the premium on the 10,500 call and put strike, on the put side it's about 70 rupees, on the call side it's about 50 rupees. The near-term range that these premiums are telling you for the market could be around that 10,430 to about 10,550 on the upside. In terms of stock futures, as Pradeep was mentioning, Punjab National Bank, the stock had a gap down opening today. In fact, if you look at the futures data, there is heavy amount of shorting which is taking place here. Open interest is up nearly 33%. In fact, as Pradeep was mentioning, the new shares which were issued in the QIP may have come into the market. Probably that's why the volumes on the cash side are also appearing on the higher side. The other one is Amara Raja. The stock was up 4% yesterday. It's gained once again 4% in today's trades. In the last two sessions, it's up almost 8.5%. The December futures of the stock are pretty active. We've seen some fresh long positions being built up here. If you look at the open interest as it was showing on your screen, that's up almost over 10%, Pradeep.
So these are some of the active stocks in today's trade. And now joining us on the show, key market voice, Gautam Sinha Roy, Senior Vice President at Motilal Oswal Asset Management Company, is joining us now. Thanks a lot, Gautam, for joining us. What's your take on markets? Nifty is all set to hit a new high. Mid-cap index has already made a new high. Do you think we have a long way to go even here on and there is nothing really to worry about?
So it's clearly a very flow, domestic liquidity, momentum market that we are in right now. And it will continue to be so unless the momentum gets broken. And to my mind, the only factor which can break this momentum is some global event where equities and other asset classes sell off in unison. Simply because, markets, other asset classes also are quite expensive. So we're waiting for that to happen. We have been waiting for a while, but we don't see that happening in the near future. But 2018 could be an interesting year. So it will be a year to watch out for us.
Such global event that one could foresee, we thought crude was a big concern for us. So when crude started moving up, we corrected a bit, but that was just a brief correction. We thought, Fed rate hike could be one, but even that has been digested quite well in the markets.
Yeah, so that's so true, because the US Fed rate hike and the balance sheet contraction has been happening, and it has not impacted markets so far. But one never knows when the inflection point comes, right? So when you have a very strong construct for markets to fall, and the construct right now stems more from valuation rather than anything else, then it simply is a matter of time. It's a matter of when. It's not a matter of if. I know there's a school of thought that this could continue to be a big rally, but the rally also has to get legs from earnings, and that has been completely amiss. I'm talking about Indian markets more so here. So far, earnings for the broader markets have been absent. It's been a PE re-rating driven market rally, and that's what worries me. So at some point of time, the PE re-rating cannot continue forever. Only two things can happen. Earnings starts to catch up. Now that also is, it's a difficult game at the market level because the PEs are so expensive that earnings have to really shoot up for the PEs to get justified. The other thing that can happen is, yes, finally the market buckles under some sort of selling pressure. And it's my firm belief that that selling pressure can come only from a global sell-off, that if that happens in the coming year. And the triggers could be US Fed, balance sheet contraction, most importantly. It's mostly a matter of when and not if. So as I said, 2018 should be an interesting year for us, for all market participants.
Gautam, markets so far have been resilient. You've spoken about the US Fed, and they've actually guided for 3 rate hikes in 2018, another 3 rate hikes, in fact, in 2019, which would mean that the funds could actually shift from emerging markets to developed markets like US. But so far, that has not played out this year. We've seen rate hikes, but maybe the FIs have not participated, but our markets have so far been supported by domestic liquidity. You said 2018 is going to be an interesting year, and it's already been about expansion of multiples and no earnings growth that one has seen, at least for the Indian equities in the last 3 years. What sort of earnings growth trajectory are you factoring in for FY19 and 20?
Yeah, so I'll answer that question in two parts. See, earnings growth trajectory at the index level has been almost impossible to predict. No one has got that right for the last 4 years, right? So trying to hazard a guess on that is at best a guess only. That's what it is. But yeah, given the low base, is a early teen kind of a number possible over the next 2 years, FY18 to 20? Definitely it is. But anything beyond that will be a surprise for me, given the broader construct of the macroeconomy, given how growth is shaping up for most of the large sectors, given that the overall macro situation for India is at the margin worsening now. After having been very good for a couple of years, the macro situation is definitely worsening, led by crude price hikes, some amount of inflation coming back in many raw materials, CAD, fiscal deficit, all could be under pressure. So I think that we are headed for improved earnings, but will the earnings be good enough to justify the valuations at the broader market level? I'm not sanguine about that. But having said that, when I'm managing a portfolio of stocks, I have to be very conscious that the portfolio delivers enough earnings growth in itself, irrespective of the macro, to justify the valuations that I am holding stocks at. Yes, we are buying stocks at expensive levels today, there's no doubt about that. But you have to be selective, you have to stick with stocks where the earnings growth would be strong enough to justify those high valuations. And thankfully, even now, we can find such stocks with moderate return expectations over the next 2 to 3 years.
So that's true. What has happened is, some sectors have been outperforming and, fund managers like you have been picking up those stocks. But there are some underperforming sectors. Financials, I think, dragged the Nifty or the overall index earnings down over the last few quarters, especially the PSU financials. Do you think going forward over next 2 quarters, that is the second half for current year, won't that scenario really change?
It will change. It will change because of the low base effect, because NPA formation will peak out. The NCLT-led resolution will also kick in at some point of time. So provisioning numbers should start looking down for the corporate bank packs and the PSU bank pack. So I think the worst from an earnings perspective for the financials, that to the corporate and PSU financials part, is definitely over. Metals have done well this year from earnings perspective. Let's see how the overall metal prices trend continue. That will also dictate a lot of this resolution that happens on the NCLT side, because if you see the bullishness on NCLT resolutions is more on the steel sector, and that's largely happened because of improved fundamentals on that side. So there are a lot of moving parts, honestly, but given the low base, there is a cause of optimism that things will improve from here on. But my only concern remains that valuations are factoring that in and more today.
Gautam, the next big event that the markets will be watching out will be the budget. And with GST now in place, we're not going to see much of tinkering with the rates. What are the key things that you will be watching out from this budget?
Yeah, so we are heading into election year next year. So it will be an interesting budget, because the popular expectation is that the last 2 budgets, especially the last important budget, which this one will be before elections, tends to be a populist budget. Let's see whether that's the case. Let's see, because we already had some major changes, as you rightly pointed out, on the tax regime side. So after that, do we again see some sort of populism coming in? Is the budget really more rural friendly? Because if you look at the entire construct of the economy, the rural side and the export side are the areas of concern. So is the budget more friendly towards these parts of the economy? Will be a critical thing to look out for. There would be an element of populism for sure, but what degree of populism do we see in the budget will be a key area to watch out for.
So Gautam, good afternoon, Neeraj here. Is there a way to take advantage of that premise? Spending, if indeed it's a populist budget, maybe the prices of pulses are enhanced. Maybe factors like those which would enhance the rural income and make the rural voter feel a lot better. And if there is a way to play it via
Yes.
trying to focus where the rural guys will spend on and therefore
Yes.
buy those plays.
Yes. So, Neeraj, that's a very important point. So, if you look at the overall construct of the budget so far, it's been more towards focus on rural productivity enhancement. So, if you look at the crop insurance scheme, for example, that's probably the most monumental thing that this government has done, not been appreciated so much by the market so far, but that gives a lot of stability to the farmers' incomes, and hence it probably lends to the farmers' ability to invest in productivity enhancement tools or products. So definitely, and the rural economy, as I said, has been on a low base. Farmer income has been on a low base. So there is a probability that because of the low base, the income levels should improve from here on, right? And these tend to be very cyclical. And secondly, because of all the things that the government has done in terms of insurance, in terms of rural productivity improvement, we really see the productivity enhancement parts like pesticides or agri inputs really taking off in a big way. So that definitely is an interesting area to watch out for. It continues to be so. Although this sector has not really done anything for the past 3 years, that's largely because of monsoons being bad, because of global agri-commodity prices being under pressure. But yeah, the low base plus the government's focus plus getting into that election year thing, all these factors definitely should make us more optimistic, more constructive about these sectors of the economy.
So how do you play it? One is to buy the things which enhance productivity. The other is if the model is not really to enhance the productivity so much as to give, in a manner of speaking, a freebie to the farmer, and then try and focus on where is the farmer going to spend. Would it essentially be the two-wheelers, low-cost housing, so on and so forth, or can there be other plays which the rural guys will spend on, and there are companies which are catering to those spends?
Yeah, again a very good and nuanced question. You're absolutely right. Typically when people think about rural, they think about consumption and that free money in people's hand, hence consumption of bottom of the pyramid products going up. That's honestly not my construct. My construct is that this government will really focus on channelizing the rural incomes or the wealth transfer that happens to these rural parts towards productivity enhancement. And that is where I would like to focus on, as it's a very idealistic thing to think of also, because the country sincerely needs that rural productivity to go up. But I think the government understands that very well, and that's been the focus area in the last budgets, and that should continue to be the case. So I'd actually, although these are very small sectors like all these pesticide and farm improvement products are very small sectors, but I think that's where the main upside lies in my mind. Of course, there could be improvement in rural demand. I am not denying that. That's also been on a low base, and that's a function of rural incomes improving. But I think the bigger play could be the productivity-oriented sectors.
Gautam, I understand you don't comment on stock-specific developments, but when country's largest steel producer is talking about capacity expansion, that is a statement in terms of the growth prospects for the entire sector. In that context, what is your view on steel sector per se in India going forward?
So that's a very important point, because it's not stock specific, as you rightly said. It's about if the most credible and the largest steel producer in the country is optimistic about the future of steel, that tells you mostly about the demand supply dynamics. So supply side has been inactive on the steel front for a while. So finally, demand is good enough for the supply side to think about reacting. And as you know, these are very long gestation reactions, right? Putting up fresh steel capacities could take anywhere between 3 to 6 to 7 years, depending on many things. So the very fact that there is some optimism on that count is a big positive for me. But it's a very pocketed optimism, right? See, the economy has been growing at a good clip for a long time. So somewhere it has to reflect in capacity utilizations in certain sectors going up. So in a sector like thermal power, capacity utilizations are still not good enough to merit further capacity addition. But the good part is that at least in steel, that's finally happening. So this is all part of that economic cycle recovery that we have been so tom-tomming about, the market has been so optimistic about. So good part is some parts of it is happening, some part of it is getting reflected in the stock prices too. But from economic well-being perspective, recovery perspective, this is the real deal. This is what is actually happening on the ground.
Gautam, one pocket which has given good returns to its shareholders is the NBFC space. Does it worry you with bond yields now hardening, which have been over 7% for a while now, which also means cost of funds for these NBFCs will go up? Do you see any sort of correction for them in the near term?
So, cost of funds is one element of the business model. So when I look at NBFC stocks, I also look at obviously the growth opportunity and top line side that they have, how efficient they are in creating future growth opportunities, how efficiently they manage tax and NPAs. So I'm not very worried about my pack of NBFC stocks, and I own a few of them. But yes, you are right. On the NIM front, there are now headwinds more than tailwinds, and that holds true for to some extent for banks too, because rates have hardened a bit. But the other perspective there is whether these hard rates are continuing to go up, or do we really see that topping out at some point? That also obviously depends on your inflation outlook. There, I think inflation, although lately has been elevated, I don't think inflation should remain much elevated for a very long time. I think seasonal spikes in inflation is what we have seen lately, and bond yields especially, are obviously very high already vis-a-vis inflation. So I am not very sure that yields should move up from here. In fact, I would think that they should stabilize. That is my base case. So I'm not very worried on the yield side either.
Okay, Gautam, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective. Have a great New Year.
You too. Have a great New Year.
That's Gautam Sinha Roy with his thoughts. However, moving on to the more micro and some specific companies, Morepen Labs is a stock in focus. Maybe a clutch of these pharma names are active today, but this one in particular, because the US FDA gave clearance to its bulk drugs used in the treatment of asthma. To discuss about this and more, joining us is Sushil Suri, the CMD of Morepen Labs. Mr. Suri, good afternoon. Can you hear me?
Yes, I can hear you. Good afternoon. How are you doing?
Very well. Thank you so much. Congratulations on this development. Tell us what this means for Morepen Labs.
This is a anti-allergy and asthma drug, Montelukast. Basically, we are manufacturing this drug since last 7-8 years, but US FDA approval was long awaited. We are supplying already in 35 countries, but US market was naturally going through the rigors. So finally we got the approval now. The customers have already started discussing the orders quantity. In the Q2 of the next fiscal, we'll be started getting orders also. So it's a product which is ready to go. Unlike many times there are approvals which take long time, then there is exclusivity period or there is some litigation. Here it's a ready to go market for the product. And second important thing is that we are already the largest manufacturer worldwide. We have around 25% market share in the whole world. So US market gives us an additional kick. So that's more important. We do have certain patents. We have patents in Canada, we have patents in EU market, we have process patent even in the US market. So this strengthens our portfolio, this strengthens our overall basket of Montelukast offering worldwide.
Mm-hmm. So how large?
The plant is already inspected, so the plant does not have any 483s pending.
Okay.
Yes, go ahead.
Okay, so I was asking that how large
it's basically
is
a $2
this
billion
opportunity
product
in the
worldwide,
US?
Yeah.
Sorry, did I hear you
it's
say?
$2 billion worldwide. In the US market, it is $300 million. $2 billion worldwide, and US market is $300 million, around 2,000 crores. So we are already doing around 100 crores odd in the other markets. With US market addition, we will be getting around business of around 500 crores in the coming 3 to 4 years. No. So it's a big jump for a 600 crore company. So where our API sale is 350 crores, so if we get another 500 crore jump, that's a big jump for the company.
Sorry, did I hear you
more
say
so because
that
US market is more lucrative.
Sorry, sir. Okay, I just wanted to clarify this. Did I hear you say that you are currently doing about 300 crores worldwide, and I'm guessing these are per annum numbers, but you expect that in US per annum you will do 500 crores?
No. I'll rephrase. This product is $300 million US for the US market and $2 billion worldwide. And we are doing 100 crores of this sales per annum worldwide with addition of US market. So we'll be doing around 500 crores in next 3 years time. So basically it will have a leap jump, 150 crore, 200 crore, 250 crores. So it will have leap jump because of the US market. No doubt the other markets are also expanding. We are very strong in Iran market, we are very strong in Russian market, and then a lot of sales in even the domestic market also.
Talking to some of the US companies.
So otherwise on the, it's a large US generic company, a listed company around $500 billion. Because of the confidentiality, we cannot disclose the names today. But once the shipment starts going, then it is public, so that name will be in front of you at that stage. So you have to wait for 2 more quarters to get the names.
Mr. Suri,
on the plant front, we are comfortable. We are already.
Okay, so you're saying this drug has a 2,000 crore market in US, out of which you plan to do almost 500 crore in the next 2 to 3 years. Could you tell us what sort of margins will you be looking at from these kind of orders?
Typically, since it's a generic product, and as you know, the generic market, the competition is increasing. So typically, I would say that between 30 to 35% is the gross margins, and net margins EBITDA will be around 17 to 18%. This is a typical margin rate, but depending on the product life cycle, margin keeps increasing. But here in this case, we are very cost efficient since we are already selling in the domestic market. So it will be certainly much higher as compared to the other products.
Okay, I think we've just lost Mr. Suri on this, but the audio is fading away. But let me clarify from what I understood Mr. Suri is saying. We'll just try and connect that line again. But let me just clarify what Mr. Suri was saying. They do 100 crores per annum from the other markets. Combined over the next 3 years, with the addition of the US, it could go up to about 500 crores, if I'm not wrong. That is what Mr. Suri was trying to say. Mr. Suri, so let me then try and ask you.
That is perfect.
Yeah, that's perfect. Yeah. So let me then try and ask you, sir. FY18, you'll probably not get any benefits from the US, but FY19, I heard you say in Q2 next financial, you will start doing. What are the revenue run rates that you believe you will clock in? Unless I'm wrong, 540 crores was the revenue, if I'm not wrong, in FY17. What do you expect these numbers to shape up like?
We'll be crossing 600 crores this year, and 580 was last year, and on a consolidated level. We'll be doing around 650 crores this year, in spite of all the rigors of GST and other things taken out. So we'll be crossing 600 this year, and going forward, we are still growing at 15 to 20% every year after year.
Wow.
On the top line front. But particularly talking of Montelukast, we'll be getting around 35 to 40% growth in Montelukast.
And have you received any orders for it?
I would say we're riding on a large horse now.
Have you received any orders?
We already
for the
started
same?
getting, I would say, delivery schedules, but not confirmed order as yet, because it's Q2. We have already started getting hints for the deliveries, so we have to prepare maybe 1 quarter in advance. Maybe we start shipping in the last quarter of this fiscal. So that's what I said. It's a ready-to-go product, unlike typical products which take long time.
Okay, Mr. Suri, we'll leave it at that. No, thanks a lot for joining us today and giving us more details about that US FDA approval which they've received for one of the drugs. And the drug size in US is almost 2,000 crore. As Neeraj reiterated, currently they're doing almost 100 crores from that drug, but with the approval from the US market, they plan to do almost 500 crore in the next 2 to 3 years. Okay, from Morepen Labs, let's put the spotlight on Force Motors. The stock has gained for the 4th straight day. In fact, Pradeep has 2 charts to explain what's leading this surge. Pradeep?
So how does the picture really look like? I can tell you. And if you look at the chart here, this is a daily chart on your screen. Force Motors has been moving in a lower top, lower bottom formation for last 3-4 months at least. And if you look at it today, we have managed to cross the previous swing high of around 3,400. Currently, we are at around 3,450 odd levels. 3rd day of strong gains with good volumes. You can see the last 3 volume lines are actually way above the 15 days moving average that you can see here. So 3 days of strong up move, and looks like the lower top, lower bottom formation is getting broken, and we are kind of showing a reversal. But look at the stock. It has been declining for a while. There has been a long underperformance. So maybe daily chart doesn't really tell you the big picture. So let's move to the weekly chart, and that will probably tell us how this stock really looks. So here now you have 2015, 16 and 17. So last 3 years, and see what this chart has really done. It was an outperformer, but started kind of underperforming, in October, November 2016 onwards, or rather 15 onwards, it turned into an underperformer. So for almost 2 years, this stock has not really moved along with the index, has rather declined when index was going up. Now, what is interesting, first of all, look at this horizontal line that we have drawn here, and it will tell you that around 3,000 odd levels this stock has found support last week and this week. This is a weekly chart, and we have just seen 3 days of the current week, but you can see the strong reversal. But the point here is that we have found support near the previous swing lows from where the previous up move had really started. And this time around, we came almost to that 3,000 level once again, and from there, so we have almost retraced 100% of the strong up move that we had seen previously in 2015. Now, if you look at it, what has happened on the weekly charts? Not only that we got support at the previous swing low on a longer term time frame, we have almost engulfed the previous, we have completely engulfed the previous week, and we have almost engulfed the entire previous month within just 3 days. So this looks like a very strong bullish engulfing on the weekly charts, which is also telling you that there is a strong reversal in place. If you look at the volume once again against the 15-week volume, in the last 3 days, just 3 days, we have seen much higher volume so far this week. And then look at the oscillator. This is RSI. It was strongly oversold, and from there we have seen a sharp reversal. So oscillators are also supporting it. So over last 3 days in this week's trade so far, probably some smart money has moved into this stock. Looks like we really don't know what's happening fundamentally, Neeraj, but after a very long underperformance, this stock has given us some signs of reversal.
I'm trying to tweet out what you just said, Pradeep. A bullish engulfing pattern in Force Motors. That's interesting. We'll watch out for this one. We'll ask our experts as well about this. In fact, as we speak of experts, Kunal Saraugi, CEO and editor at Equity Rush, Johnson right now on the show. In a bit, we'll also get in Hayden Mendonca. And before we talk about the index strategy, since you're on the topic of Force Motors, let me ask Kunal about this stock. Kunal, your views may differ, no harm, but have you recently looked at the charts of Force Motors? And if so, what does the chart look like?
Well, I am kind of, if you look at the chart, Force Motors has got a very solid chart formation. The stock has been an outperformer throughout. And I would completely concur with Pradeep's view on it. I think it's got a very good breakout today, and very likely that you probably will see more higher levels on this one. So I would kind of go with it. I think it's perfectly possible that the stock might actually get to 3,900 to 4,000 levels over the next few months. So definitely a buy at the current levels, and one should put a stop loss somewhere around 32.50 and go long on Force Motors. So I would agree that the stock is now broken out.
Let's also address those important flashes there on your screen. Reserve Bank of India has placed one of the banks, that's Bank of India, under prompt corrective action, which we all call it as PCA, and precisely that's the reason why you've seen the stock correcting. If you could just pull up the intraday chart of the Bank of India and see what that's doing. As you can see, it's fallen almost over 4% post this news has come about. And remember, PCA is triggered by RBI once the bank, they breach certain regulatory requirements which could be pertaining to minimum capital return on asset, or in fact quantum of non-performing assets as well. But let's just get a technical view going on this. Kunal, on the charts, Bank of India down almost 4%. Do you see any opportunity to short the counter?
Well, I think definitely one could sell the stock with a very short-term trading kind of horizon. I think the next major support comes in only at around 170, and beyond that the next support is at 165. So there is some more downside, I think, on the cards for this one. One can go short, but one should be mindful of stop losses here, given that the stock is already down almost more than 5%. Your stop loss should be in the region of 176. I think 170 is your first target intraday. The next target could be 165 on this one.
We have Amit Jeswani, founder at Stallion Asset Management, joining us on the show. Amit, good afternoon and thanks for taking the time out and speaking with us at Bloomberg Quint. What's your sense, Amit, let's just first talk about the topic at hand. Bank of India is one amongst the few banks which has now been placed under the prompt corrective action. We don't know further details, but what's your sense of what this does to some of these banks, and what's your larger view on the PSU banks in lieu of all the measures that the government is trying to take?
See, we've not been bullish on the PSU space at all for a very long time. So we don't track individual PSU banks. See, the thing is, you can trade them for short-term 10-20% here and there, but these can never be long-term bets. So it doesn't get into our style of investing, and we do not even look at these kind of companies.
What do you really like in financials? That would be my next question. But just to talk about what the prompt corrective action really means, there will be certain hurdles so far as the dividend declaration is concerned. There will be certain hurdles on the remunerations and all. And most importantly, the way a bank can really grow its assets. But they'll have to go back to RBI and satisfy them with the actions taken. And most importantly, if they manage to get additional capital from the government or from the market, they may move out of it. But the most important thing is, Neeraj, that Bank of India is getting included into the list of some of the worst PSU banks, so to say, or the underperforming banks. So we had IDBI and United Bank, and these were some of the stocks, including IOB, that nobody really wanted to touch. But Bank of India has actually been an outperformer. If you look at it relative to these banks, BOI has been doing quite well, and we thought it was moving along with the likes of SBI and not really going with the IDBI. So this would be a bit of a shocker for traders and also investors who have been taking position after the recapitalization announcement came in. If you look at the movement over the last 3 months, you'll realize that this has actually been a performer.
That's interesting. Okay. So before we get to a full-blown chat with Amit, let's just get in Hadrian as well and talk about his thoughts on trades and maybe an index strategy if he has one too. Hadrian, good afternoon. Thanks for joining in. Is there a call on the index or is there a thought on the index? And then couple that up, of course, with your stock-specific ideas.
Yeah, good afternoon, Neeraj. Of course, Nifty is actually doing pretty well. If you see in the past 4 days, it has been on a roll. In fact, post the election outcome, there has been this knee-jerk reaction that has actually prompted out to a double bottom kind of a formation. Secondly, the Nifty is also broken out from a flag pattern breakout on the daily charts, which is very, very positive. And in fact, today's Nifty breaching past the 10,490 mark is another positive for the overall structure. Mind you, Nifty was stuck into this lower top, lower bottom cycle in the short term, but finally today we have breached the top. And a close above the 10,490 mark will be a big relief for the overall structure of the Nifty. So definitely longs should be held on to. Conservative target of the flag pattern breakout is another 400 points from here. So that takes the tally for Nifty towards 10,800. But if I give you a complete projection of what Nifty can actually look at in the next 3 to 6 months, that is coming close to 11,250, 11,260 zone. So that's what the overall projection of the flag pattern breakout is indicating. But still, there is one small concern that I need to note, I need to mention right now is the hanging man formation, candlestick formation that is a pretty uncertain sign at the current juncture at all-time high levels. Hanging man at all-time high should be a big cause of concern over here. So it's very important. 10,490 has to be broken on the closing basis. That would be a big positive. As far as the trading calls are concerned, we're pretty bullish on Tata Elxsi. The stock has given another flag pattern breakout on the daily charts, and volumes have been rising. And best part is that if you check the weekly chart, it has retested the weekly breakout zone. So that is the best way to play, the overall retracement that has happened. One can buy Tata Elxsi for a target of 995 and place a stop loss at 945. My second stock is Arvind. The stock is looking pretty sharp in today's session. It has actually broken out from a symmetrical triangle pattern on the daily chart, and I think one can buy Arvind at these levels, play for a target of 470 and keep a stop loss at 440.
Your calls, Kunal?
Well, the stocks that I like, first up, I think is DLF. It's had a very clear breakout today, and it's running away even as we speak. I think 256 is the next port of call for DLF. With a stop loss of 242, I think definitely merits a buy. The other one I like is the media major TV18. I think it's broken out afresh on the charts, although it's, I think, in the ban period. So you can't trade it in derivatives, but I think in the cash market definitely merits a buy. 61 is the next target here. 57.5 or 57.7 is where one should put a stop loss.
Okay, TV18 has hit its fresh 52-week high in today's trade, and as Kunal was mentioning, it is in the F&O ban. But let's talk about then the couple of stocks which have been weak since the morning session. Hadrian, how is Punjab National Bank looking? Since morning, it has had a gap down opening and the stock's been under pressure. On the cash side, we've seen the stock fallen on very high volumes. How is it looking on the charts? Would you look to initiate any fresh shots here?
Yeah, PNB, in fact, if I'm not wrong, was one of our buy calls yesterday, and unfortunately, we saw a lot of selling pressure just when we started trading in the morning trades. In fact, it came with a gap down, so that is even more worse for any trader. So PNB at the current juncture should be avoided. I know it is contrary to what we said yesterday, but I think it is best to avoid because the gap down has actually opened up a window on the downside that could take PNB closer to 165 levels. So PNB should not be looked into if you are a trader currently with long perspective. As far as the shorts are concerned, the gap down, as I said, has opened a window. So I think you can play for that 5-6 rupees downside from here on.
Okay. Well, let's get in, Amit, now to talk about what is it that they are doing within their asset management and the portfolio management services that they might be doing. Amit, the last few days have seen a clutch of these mid-sized pockets do really, really well. If it was dairy products the whole of last week, it was select paper companies the week before last, and then I can go on a week before and pick out a pocket apiece. What's been happening in the broader end of the spectrum? Where is it that you found value that you might have wanted to buy?
See, the thing is that we're looking at trends, right? This market is now a commodity supply crisis market, right? So between 2003 and 2007, commodity stocks were rallying and they went up 10-15 times, but the reason was it was a demand driven rally. This time the rally is all supply squeeze rally. So but paper stocks rallied because Ballarpur shut down, right? And then there were problems in China, and that's why the rally continued in paper. Steel right now looks a very good sector. If you take the top 10 steel players, 6 of the promoters are issuing warrants. So Jindal Steel and Power issued warrants to themselves at 140 per share. Godavari Steel and Power issued warrants to themselves at 130 per share. Prakash Industry issued warrant. So in the last 3-4 months, majority of steel company promoters are buying themselves. They are seeing a cycle which is reversing, and the indications are clear. The trend is very clear towards steel stocks, and that is a sector that we would be looking out for the next many months. Now, this cannot be a very long-term sector, but for the next 6 to 8 months, there is definitely something big happening there.
You know, for last 2 or 3 days, people have been trying to identify some of the sectors that would benefit by government's increased rural focus. Jain irrigation has been a key beneficiary. Do you like this one, or you have some other stock in mind to play that theme?
So we've not been able to get the rural theme right, to be honest. Our portfolio is it's 41% in the financials. So we are chasing stocks that can grow at 30-40%, like very high growth rate, because that's where real wealth will be created, and that's how trends are formed. So right now we're looking at infrastructure. We still believe that infrastructure is the place where a large percentage of government spending will happen. We still believe financials is a space where high quality NBFCs like Piramil, Edelweiss, those are the kind of companies that will keep growing at 30% plus. So that's where we have put our money. Infrastructure, we long Dilip Bilkon. That looks that's one guy who's been executing 95% projects before time. The stock trades at 22, 23 times 1 year forward, FY18. So we still find a lot of value because that's where large growth is going to come. Jain Irrigation, we're not so sure about it.
Amit, what sort of levels that you're targeting for Dilip Bilkon? Because this is one company in the infra space. I remember interacting with the management that they've been getting bonus for completing their projects before time, where other companies struggle to do that. In fact, Rohan Suryavanshi highlighted that for FY18, they're targeting almost 100 crore bonus.
See, we are looking at somewhere around 1400 for starters, but it's a trend, and till the time the company keeps growing, your valuations increase. So if a company is growing at 30% every year, you will see the valuations increasing a little more because people have conviction that it can grow faster. And the thing with Dilip Bilkon is, and I'll tell you the difference between Dilip Bilkon and all other infrastructure companies. As soon as Dilip Bilkon gets an order, and Nitin Gadkari has been very open that he's going to give out all orders by March 2019, a large percentage of that. As soon as Dilip Bilkon gets orders, market will start discounting 2021, 2022 very fast. The reason is they have executed on time. But example, let's say an HCC gets an order, markets will not discount like 2021 because the track record of execution has been bad for HCC. So, you know, that's the difference. So markets, Dilip Bilkon will keep getting those 2021, 2020, they'll keep get super hyper discounting till the time they keep executing things on time.
Okay. So this obviously forms one key recommendation from your end, Amit. I'm told you one more. Why do you like the next company that you do, and what's the story in that one? JSPL.
So we long the whole steel cycle. So it's a momentum trade, and we've caught it right, the steel cycle, and we're just long the whole steel cycle. This is a very 6 to 8 month kind of thing, and it's just that all these companies are now going to turn around. So next year will be a mega year for steel companies. We got HEG right like 6 months back. Now we're getting the steel cycle. See, when insiders are buying in a commodity, that's probably the best sign you can ever get in a stock. So sugar cycle, the start of the sugar cycle was backed by insiders buying. The start of paper cycle was backed by insider buying. The start of graphite cycle was backed by strong buying from HEG promoters. And that same trend, if you take 10 steel companies, 6 of them are buying, the stocks are making new high. It is very difficult to say that what EPS these guys will exactly report, but they look cheap on replacement cost terms, and that's what we are doing.
Can we just pull up few stocks? I think a couple of your cement stocks have been going up. Pull up Ramco Cements. I guess that's up almost 13 to 14% now. The chart will just come up on your screen. And even as we speak, besides Ramco Cement is almost at day's high with gains of 12%. Let's also pull up India Cements. I guess that's also gone up in the last half an hour or something. India Cements is also at day's high with gains of almost 5%. The large cap cement stocks, can we check ACC, Ambuja and Ultratech, what they are doing currently? Okay, I think the movement has just come in those stocks, though they've also, all these stocks are off days low, at least ACC, Ambuja and Ultratech just about trading flat for the day. Kunal, on the charts, anything on Ramco and India Cements?
Well, I think Ramco has already had a blow-off kind of move, and it's slightly difficult to get into Ramco given that it doesn't trade too heavily in the F&O segment. So I think one should rather avoid Ramco. But India Cement definitely merits a buy. I think the stock has broken out fresh on the charts. 179 is the level I was looking for. It's trading at 180, comfortably above it. I see the stock getting to 190 in a hurry. So I think India Cement can be bought provided it manages a close above 179 towards the end of the day today.
Okay. Let's talk about the buzzing stock of the day, and Saloni Dhanuka is joining us to tell us about which stock, Saloni.
So Neeraj, it's about Ashiana Housing. So the stock has been on a winning spree for the second day today. It rose as much as 10% to its highest level in over a month, while trading volumes remain high at 30 times its 20-day average for this time of the day on the National Stock Exchange. Now the stock has been buzzing on the back of a bulk deal which took place yesterday, where an ICICI Prudential mutual fund bought over 2% stake in the company, while Jwalamukhi Investment Holding have sold over 2.6% stake in the company as well. Also, company's foray into new category of residential property, that is kid-centric home, is proving beneficial for the company. Now, in terms of business, Ashiana Housing develops real estate in both commercial as well as residential space, and the company has a market capitalization of over 1800 crore, and the stock has returned approximately 35% so far this year. Back to you guys.
That Ashiana Housing active today. I must say what is active today is some of these telecom and telecom related small caps. Reliance Communication is up 23%. MTNL is up about 20%. ITI has gained about 8% as well. So really strong moves into these names. And then some of the more stable names which have gone up include Ramco Cements, which is up about 12.5%. It's a good move there for Ramco. Actually, Sanghi Cement too is up and about in the session today. There's some strength in select cement pockets in trade, particularly the regional and the mid-sized players. All of them seem to be on the move. Amit, what's the call on cement? We can argue that the valuations are expensive, but there have been mixed trends on pricing as well. And if indeed the infra theme is to play out the way you are saying, cement should ideally be a natural beneficiary.
Absolutely. So we don't hold any cement company right now, but we are very positive on the whole infrastructure and the infra ancillary. In south, the cement capacity utilization is 55-60%. So there, the delta, whenever the demand comes, the delta is going to be very huge because there's a lot of operating leverage in smaller cement companies like Sagar Cement, Deccan Cement. So those are the things that we'll be looking out. But we run a concentrated portfolio, so we've not added cement at all in our portfolio. And one more important thing is that the pricing of government, when government buys cement, they don't buy cement. Let's say the south cement prices are 330. When the government is buying cement, they're not going to buy it at 330. These are tender based orders. So they get about at 180, 190 because cement companies sell it cheaper to the government, and so the margins are not so high in government contracts. So we've gone and bought the road contractors rather than the cement companies this time.
The report actually on Reliance Communication says that the dollar bond holders have kind of come together and appointed an advisor. They're trying to take action against the company. What could that likely action be? I mean, earlier we have heard China Development Bank had said asked NCLT to kind of consider this as a case. Just like the NPAs of PSU banks, there was a PR agency also that approached authorities for a similar application. But would that really be positive for the stock, the way RCom share has gone up?
I confess, I would.
If the bondholders are going to take action,
I wouldn't know about why.
Expect the stock to react
Bonds
positively.
are actually now trading some 40 cents a dollar already. Have corrected in last 3-4 months ever since all this crisis started, and the company is in an unwinding mode in any case and trying to sell some of the assets, but that may not be enough to pay back the $7 billion. Interestingly, these bondholders only account for 300 million out of the huge loan that the company has.
Yeah. Well, I don't know. I mean, you can argue till the cows come home. MTNL, there's this whole revival plan that has been submitted. And I don't know if I wouldn't remember of a single instance, but I'm sure there are countless such revival plans that have been floated around for companies like MTNL and a few others. Only that they haven't seen any fructification of an actual revival taking place.
So, ITI is a test case where in fact government has managed to revive it to some extent, because you can ask some of the PSUs to give some orders to ITI, you can ask defense services to give their telecom orders to ITI. But how do you get customers for MTNL? I don't understand that. So if that is the model that the traders are actually talking about, that if ITI can be turned around, why not MTNL?
Yeah, and it's I would call it downright silly, but that's just me. But anyways, let's wait and watch. A clutch of these names doing rather well for themselves. Arcom is clearly at the top of the pile right now on the Nifty 500. Is just doing exceptionally well, some 25% now for Reliance Communications. It would be wrong to probably ask Amit for a fundamental call. Let me ask for a technical call here. Kunal, Reliance Communications or, well, maybe an ITI. I don't think you can buy an MTNL right now. It's locked on an upper circuit if I'm not wrong.
Well, Arcom definitely, Neeraj, I think there is definitely more upside. The kind of volume that we've seen on the stock, the kind of breakout that we've seen, I think there could be more to the story than meets the eye at the moment. I think you might see some more developments taking place, and probably markets have a whiff of that, and that's the reason it's going up. The kind of price volume action we're seeing on Arcom, I think definitely the stock should get to around 19.5, 20 rupees, which is a very substantial percentage jump. So I think Arcom can be definitely looked at. ITI has already had a very spectacular kind of rally. I expect for the stock to continue to be in this uptrend. So even 175, 180 is gettable on ITI. So I think both of these counters can be held on to and can be actually bought at the current levels.
Okay. Amit, actually, none of the PSUs will actually confirm to your screen where you want to look for 20, 30, 40% kind of a growth. But if you look at some of the PSUs like BEML, you have Dredging Corporation moving up today, and some more names that we talked about earlier. Anything that you like in PSU space at all?
I don't think Amit heard you, Pradeep.
We have not invested anything on the No, I heard you, but we've not invested in the PSU space. No, so we like the fertilizer space. That is one space, but we played it for the DBT. So we bought fertilizer stocks like a year back, but now that DBT will come and there'll be a lot of noise, we intend to sell the fertilizer space. But we have not actually bought anything in the PSU space for the last 5 years.
What's the dark horse, Amit? Last couple of questions before we let you go, but every portfolio manager would have some stable names which will grow at maybe 15, 20 odd %. A couple of dark horses as well. What's the dark horse, if you had a liberty to speak about it?
So we've just gone long this company called J Kumar lately, and that is one stock that we've been buying aggressively for the last 1 month. The company is into metro space. In Bombay, there are out of the 9,000 crores of metro orders, this company got 7,000 crores of metro orders. The company is only in the EPC business. They have no bought. Between 2007 and 2017, when most infrastructure players have struggled, this company has increased revenues at 14 times. So here you're getting a debt-free company. Only EPC work. Metro opportunity is there everywhere. It's a 4 lakh crore opportunity. This guy has expertise in metro because they were the ones who did Delhi Metro, and now they're the ones who are doing Bombay Metro. You guys are in Bombay, you know what the speed of work of metro is happening. The next 2 quarters, the company will report more than 40-50% growth in earnings and profits. So that's one bet where we are very confident, and we are very optimistic that the next 2 quarters should get re-rating in that counter, and it will get re-rated aggressively. And next year again, FY19 is election year. Since a large percentage of order book is Bombay Metro, it trades at 6 times revenue to order book visibility is 6 times. So this is a no-brainer for us, and we've been buying this aggressively.
It's been all economy facing, Amit, from your end. I've heard 3 or 4 names, all economy facing, infrastructure related, nothing on the consumption side?
The thing is that bull market goes in phases, right? The first phase was high quality, high growth. We played the consumer cycle there. The next phase is high growth, a little lower on quality. We are in that phase right now. The third phase of the bull market would be no quality and no growth. We will underperform in the third phase because we will not get there. But right now you just have to look at high growth and little low quality, because if you be on the high quality, high growth consumer type companies at 50-60p, you will not, there is very less likelihood of you performing even to market levels, I believe. So you will underperform so badly in this bull market, you'll miss the whole bull market. And yes, so that is the whole thing. We like where there are trends, and 2009 to 2014 was a large consumer trend, and you had your page industry going up 30-40 times, and that's where we were there. But right now at 50-60p we're not comfortable. We like growth at a very reasonable price. Right now we find growth in these kind of places, and that's where money will be made for the next 1-2 years.
Okay. Stay on with us, Amit, as we speak about the Fab 4 stocks of the day. And to take us through the same, Yash Upadhyay joins us. Yash, over to you. What are you tracking today?
Good afternoon, Navneet. So we kick things off with Butterfly Gandhimati, and the shares of the electronics appliance maker are locked in a 5% upper circuit for a fourth consecutive trading session today after renowned investor Ashish Kacholia picked up 2 lakh shares, or a little over 1% of the total paid up equity, with Reliance Alternate Investment Fund being the seller. Moving on, we also have shares of healthcare service provider Max India making quite the moves, and the stock is up about 5% today after the company informed the exchanges that they have resumed operations at its Shalimar Bagh hospital in New Delhi. Now, this was the same hospital which had got its license cancelled earlier this month, so good news coming in for this one. Crompton Greaves is another name on our radar, and the stock has surged close to 6% today after the promoters released pledge on close to 5 crore shares, or about 7.74% of the total equity. With this, the promoter holding pledged with lenders has come off from 65% to 57.25%. Moving forward, we also have Camlin Fine Sciences, and this one had gained close to 11% today after MK came out with a note initiating coverage on the stock. They have assigned a buy rating and have set a target price of about 183 rupees, which translates into a potential upside of 55% from its previous day's close.
Thanks a lot, Yash. But Reliance Communication is now up 35%. And not only that, the other Reliance Anil Ambani Group stocks, you've got Reliance Capital, that's up 7%. Reliance Naval has seen gains of almost 10%. And also Reliance Infra. Remember, I'm talking about the stocks which are also there in the futures and options space. So probably you've got traders which are punting on back of some news which has come in for Reliance Communication. But talking about this group, there was a recent listing of Reliance Nippon. If you could just pull up that. Amit, I'm going to come to you. You've been pretty bullish on financialization of savings theme for the year. Which are the stocks? I'm sure there are very limited stocks which are listed to bet on this theme. Do you like Reliance Nippon?
So I'll first speak about the theme. We are exactly at the same place where the US was in 1980. In 1980, 3% of US citizens were investing in the stock market. 20 years later, in year 2000, 48% of US individuals were investing in the stock market. In India in 2016, we had 3% of individuals investing in the stock market. I don't know if in the next 10-20 years it'll be 40% or no, but I'm very confident this number will be somewhere around 20%. Now, how do we play this? We know, and the AUM in the US mutual fund went from 97 billion to 6.7 trillion dollars between 1980 to 2000. Huge wealth was created in asset management companies. Now the top 5 asset management companies in India which have 57% market share, have a total profit of 1800 crores. You just look at the profit pool. The profit pool is so small that one hedge fund in America makes more than the entire sector. This sector is going to increase their profits multiple times in the next 10 years, and financialization of saving is a real very big long-term theme. Now with Reliance Nippon, coming to Reliance Nippon and the stocks where we are playing, we've bought Edelweiss here and we're very bullish on this space. But on the asset management companies, if you take the top 5 asset management companies, the worst managed asset management company is Reliance Nippon. Even this quarter, the company grew revenues and profits at 20%. Their ROE is 22%. So at peak, they're doing 21% like ROE. This is probably the worst managed AMC. We love ICICI AMC. We are ready to pay top dollar for it whenever it gets listed. We didn't buy Reliance Nippon, even though we're bullish on the theme, but the company is not doing what it should be doing. So we're not negative on Reliance Nippon because the opportunity is so huge, but we are not positive on it because they have not been doing well structurally.
Wait for a better AMC to get listed, but one relisting that was kind of tracked by the punters and speculators and also some long-term investors as well is Syntex Plastics, because we thought that most of the burden will go away and this will become an interesting consumption theme. But if you look at the performance so far, it hasn't done well. Now we have a report from Philips Securities with a target price of 145. That talks about huge upsides from current levels of around 80. Amit, do you like this stock as well? We have seen just one quarterly number and that was disappointing. What do you see?
So we never liked the balance sheet of Syntex, and we actually find the balance sheet very dodgy here. So we don't want to comment on cement at all, on Syntex at all.
Not even Syntex Plastics.
No, not even, because we know the group like how they have operated, and we don't want to play this theme, this stock, this promoter group at all.
Fair call. Amit, it's been a pleasure talking to you today. Thank you so much for taking the time out and being with us, and look forward to have you more often on this forum.
Thank you.
Okay, that's some interesting names out there, 2 or 3 or economy-facing names. J. Kumar. I heard a couple of other infrastructure names that Stallion Asset Management spoke about. Some interesting names out there. Okay, bring up some other stocks. Symphony is one that I wanted to mark. Actually wanted to do slightly detailed discussion on that as well. It's come off a little bit, and which is why we didn't do it. About 1.25% higher, but 1829. The last 3 or 4 days, this one has been on a roll. Extremely strong moves by Symphony. So do watch out for this one. Today it seems to be a clutch of PSUs which are now starting to do well. So it's not just MTNL and ITI. Dredging Corporation 2 in today's session has moved up about 6.5% higher. So good going for that one. And then some of the plays which were sleeping for the last few days have started moving up again. Future Consumer is one such example. 5.5% higher in trade today. A good going for both of these names. Hadrian, any thoughts here? Future Consumer or a Dredging Corp? Both the stocks are, in manner of speaking, resuming a very strong uptrend.
Yeah, Future Consumer more specifically is looking pretty impressive after the move that we've seen during this week. The stock is almost up 7 to 8% in the past 2-3 days. So I think doing a quick weekly chart check, there are indications that Future Consumer, if it manages to close above the 72 mark, we may well see a fresh breakout coming in on the weekly charts, and projections of that weekly chart is actually indicating we may see Future Consumers rallying towards the 85, even 90 mark, because the breakout is so strong. Volumes have been accompanying the price move as well, so that is further accentuating our bullish stance on Future Consumers. So I think it's a definite hold if someone wants to buy at these levels. Close above 72 should be the levels that you should watch out for.
Okay.
Yeah.
So that is these are some of these stocks which are doing well, and the call coming in. Well, if you look at some of the smaller shares like Kridhan Infra is up today again, although it has cooled off a bit from the highs. I would say is up only 3.5%. Now, if you look at it, you have Morepen Lab, which has hit the 20% circuit on the news that we discussed. You have Camlin Fine doing well, up around 7%. Ucal Fuel has been a consistent performer as well. Siddharth Sidani, Senior Vice President at Anand Rathi, is with us now. Siddharth, any of these smaller names that you have liked or recommended, these stocks or maybe something else that you have recommended to your clients?
Well, from the stock list which you were talking about, we have not recommended any stock in that. But one thing I can just comment regarding Camlin Fine and other education stocks, there is an expectation that some kind of a reform may come in for the education space, and that is why the entire space is buzzing. Apart from that, the stocks which we are recommending from the mid-tier space is one of the cyclical, which we believe that after so many days of China news and events which is coming up, cyclical was little tepid. Now cyclical would be in the move. Philips Carbon, which we believe seems to be a company where there is a good potential of strong growth coming in for the company. Around 7.5% CAGR volume growth we can expect. Company is 40% revenue coming from specialty carbon black, which is again a high yielding business for them. Around 16-17% margins are also expected going forward. Overall operational performances has been doing good. Philips Carbon Black as a cyclical play, we like this story and we believe at the current price one can buy with a target of 1107. And the other company would be from the mid-tier banking space, would be Federal Bank with a target of 140. Overall, the corporate loans has been doing good, retail space has been doing good. If you look at the NIMs, around 3%, it is sustainable going forward. And if we talk about NPAs are reducing year on year, slippages are also not that great, high. So Federal Bank looks very interesting in the mid-tier space, private banking space, with a target of 140.
Okay. I'm really enamored by this move of Ramco Cements. It usually doesn't jump up so much. I don't know if there is a price rise or something like that has happened, but in which case some of the others too should have moved up. But at 800, this is a substantially strong up move by Ramco Cements. Yet, yes, they had come out with a quarter which was better than estimates, but no, the price is just the price move and a tick of 800 on Ramco is just very, very high. I would reckon this would take its price to book levels northwards of 5.5, which is not cheap for a cement player, but hey, it's doing rather well for itself. Any thoughts of here before we go to Navneet Saluja? Any thoughts, Siddharth, on Ramco Cements?
Well, company, as you rightly pointed out, fundamentally has been doing good. The valuations perspective, EBITDA per ton or EV per ton, whatever you talk about, has been really doing good in the south segment. But yes, price is running ahead of its fundamental as of now. We had a coverage on that. Our target has been already achieved. I think currently the price is little steep to get into. If you are planning to play any of the mid-cap cement play, I would still suggest the mid-India, central India kind of a cement play, that is Heidelberg Cement. Again, we know here the businesses in terms of valuations has been doing good. EBITDA per ton would be the highest in the history for the company in coming quarter. Overall perspective, CAGR growth around 8-9% can be expected for the company. And regarding the issues which were playing out for Petcoke and which Supreme Court had cleared, I think that has nothing to do with Heidelberg Cement because it is a more of central India play. Heidelberg Cement with a 190 target looks very interesting to me in the cement play.
Okay. Arcom is the top draw. I don't know if it features within Navneet's list of stocks which she may want to point out, but certainly Arcom staying out there for viewers tuning in right now. Look at what Reliance Communication is doing. It's up 35%, 17.12. It took a brave call from Kunal Saraogi, I must admit, at 25% higher to give out and stick your neck out and say that I'm willing to buy that stock. Kudos to Kunal Saraogi, frankly. But anyways, before we go back to our experts, let's get in Navneet Saluja, where an expert of sorts, Pradeep, at this hour to tell us which stocks are going to enter and come out of the F&O ban. Navneet, what
No, you were talking about Reliance Communication and I was just checking whether it could because it's a usual suspect which usually remains in the F&O ban, but I don't think so tomorrow it's going to come, but we'll have to wait and watch as the trends change in the last 15 to 20 minutes of trade. But three stocks which can feature tomorrow in the list are Dewan Housing. If you look at the overall open interest as a percentage of market-wide position limit in the futures and options market, now that is as of yesterday was 92%, and for a stock to enter into the F&O ban it has to breach the 95% mark, so that's trading pretty close to that, and it has added open interest in both futures as well as couple of option strike. The other one is DLF. The counter has gained a lot in today's session, one of the top gainers in the Nifty Realty Index. That too could enter because there's been a substantial addition that is seen at least for the DLF futures in today's trade, and Balrampur Chini is the other one. The counter was pretty active yesterday on the upside, but today it's seen some cool off, but the futures have seen substantial amount of addition when it comes to open interest. One stock which can come out of the F&O ban is TV18. That stock touched its fresh 52-week high in today's trade. It has been trading in the positive territory, and yesterday it was almost 84% total OI. For a stock to come out of the F&O ban, it has to come below the 80%, and if you go by the data today, it looks like so far at this point of time it can come out of the F&O ban for tomorrow's trade. And
I think Kunal has a buy call on TV18 as well. Thanks a lot for that, Navneet. So do watch out for these 3 or 4 names. TV18 may come out of the ban. 2 or 3 names. The interesting one is Balrampur Chini, though. I would have thought that trades are not that frantic in the sugar space. They had all cooled off in the session today, but Balrampur Chini might be a different kettle of fish. Just bring that stock up once before we get to Adrian and Kunal once again. Balrampur Chini down about 2.5%. Fairly high volumes on the cash side as well. Remember, it's not just Arcom, ITI, MTNL doing well. I don't know these buzzes on MTNL. Pradeep spoke about one buzz. There was some talk of how there might be some waive off the liabilities which are due to TRA and DOT. I don't know how can such things happen or how soon will they happen if they are to happen. But hey, the stock is excited and the volumes, guys, are a bit of a giveaway. 24 million shares traded on MTNL. That's not small fry. That's a fair bit of volume game that is happening in MTNL as well in the session today. Hadrian, you know, the Nifty 50 has had a bit of a bounce today in the IT pocket. Wipro is up about 1.25%. Infosys is higher. A couple of other stocks are doing decently well too. It's a bounce after the fall that we had seen yesterday. What are your thoughts?
Yeah, so say Nifty IT has definitely bounced, but it is still stuck into this very wide trading range now that it is stuck into from the past 1.5 months. So the breakout for the Nifty IT is coming exactly above the 11,350 mark. So once we see that breakout happening, we'll see a very strong consolidation and a continuation pattern breakout on the upside, which would then mean that a lot of these big names like Infosys, TCS, Wipro, and not forgetting even the mid-cap IT stocks that we are pretty bullish on, such as Tata Elxsi and Cyient. These stocks would actually make a run towards higher levels. So I think Nifty IT still has a little more work to do before we see that strong breakout on the upside.
Okay, that's the view on Nifty IT, but it's time for us to look at what the dealing rooms are really recommending. Darshan Mehta joins us with his channel check. Darshan?
Yeah, so lots of counters buzzing in trade, but actually I don't have any kind of information on Reliance Communication as yet. But Tata Motors is something that's been spoken about today. Some of the large FIIs are accumulating, not aggressive accumulation as such, but yes, there is buying that's happening in Tata Motors. So that's one of the counters that's been spoken about. Atul Limited, again, another counter. There's a buzz of a possible corporate announcement. The counter's up almost 4% in today's trade. So we'll definitely watch out for Atul Limited. And the last one is Ramco Systems. The Ramco, most of the Ramco companies are up. Ramco Systems also, some of the HNIs are accumulating. If you look at Ramco Cements, that's actually managed to surge up 12%. There is Rajpalayam Mills, which owns stake in Ramco, that has moved up. And Ramco Systems is the last one which hasn't moved. So there is a little bit of accumulation that is happening in this counter.
Okay, so these are the stocks the dealers are really focusing on. Thanks, Darshan. Although Darshan doesn't have anything on Arcom, but Kunal, the question everybody must be asking now is whether to hold if somebody had bought, earlier in the day, or you will book profit and go.
Book profit.
You change your name to Kunal?
Well, I think, Pradeep, if you look at the price volume action.
No, Kunal, Navneet was trying to give
the
answer for you, Kunal.
No, because it's not every day that you see a move like 30 to 35% on Reliance Communication.
Yeah, but okay.
On the upside.
No, but we are not predicting anything out here. We leave that to Hadrian and Kunal. But Kunal, it was a brave call. So the question naturally is to you. What would you do now?
See, I'd continue to hold on. I mean, a move like this, of course, is rare, but it's got to be with a reason. I don't really see the kind of volume buildup that you've seen on the stock, the kind of price action, and it's sustaining towards the end of the day. So I think definitely market knows something which is probably not apparent as yet. So I think one should hold on to long positions, and probably the stock might actually see levels of 19.5, 20, which could be the next major resistance level. So I would hold on to Arcom if one has it.
Okay, by the way, Nifty Bank has fallen by 130 points now, Neeraj. So it looks like we are going to see a lower close on almost all the indices, at least Sensex, Nifty and Nifty Bank.
Yeah, the PSU banks have kind of played spoilsport, right? The last couple of days they've been active. In today's session, I think by and large, we haven't had the PSU banks really participate in a big way. It's a valid strategy to ask you, Hadrian, before we get in the final top closing strategies. What about the Nifty Bank or the Nifty PSU Bank X as well? What do the charts suggest here? Is there a trade?
As a Nifty Bank, as I said, is not too far away from its all-time, closing highs. And I think with the PSU banks actually, which were active in the past 2 days, they have actually seen a little bit of profit booking going around here. That's where even our PNB went wrong. So I think at the current juncture, I think we'll enter into consolidation phase as far as the Bank Nifty is concerned, because we need heavyweights like SBI, Bank of Baroda to participate along with the private banks that are showing a little bit of positive move. So I think it has to be a total PSU bank, private bank combination that has to work for the Bank Nifty to move higher. So I think consolidation is well on the cards in the coming days or so.
Pull up the chart of PVR. That stock's gone up, I guess, in the last 10 to 15 minutes or so. Yep, it's almost at day's high. PVR is now trading with gains of almost 5%. Kunal, on the charts, does it trigger any sort of breakout on the upside? Can one initiate any sort of position here?
Well, definitely. I think PVR looks very, very strong on the chart. It's outperformed the markets. And I think if you look at the overall chart structure, it formed an inverted head and shoulders and gave you a breakout 2 or 3 sessions back. In fact, that was the best point to have entered PVR. The stock now runs into a resistance at 1440. So not the ideal time to buy. But if one has it, I think one should hold on. You probably might, once it breaks above 1450, you probably could see 1525, 1540 on this one. So I'd hold on to long positions, but not initiate fresh buys.
Wow, and look at the Nifty Realty Index. That's gained almost 3% now. You've got stocks like India Bulls Real Estate that's up over 6%, HDIL, DLF, Phoenix, Soba, a couple of the other counters which have been trading firmly in today's session. Siddharth, in the Nifty Realty pack, DLF has been pretty strong in the past few trading sessions. Well, the company is making some efforts to pay off its debt as well. What would your advice be if somebody is holding DLF right now?
I think if somebody is holding it, I think he should continue holding it. We don't recommend a buy on this, and we doesn't have a coverage also. And that's correct that DLF is trying to come out of their core or non-core businesses and focusing on core business, trying to reduce their debts, improve their balance sheet. So overall, being a leader, of course, it's a good company to be in and one can ride through. But if I want to play a real estate theme altogether, I would like to go for an affordable theme in terms of housing finance space. And there what we like is India Bull Housing Finance. Overall numbers has been good. If you look at the last quarter's profits also was around 20 to 23% higher. And I think that run rate should continue. In the real estate, I would only play affordable housing and housing for all. And the best way to play that would be housing finance space rather than direct real estate.
Okay, 3:20. Let's get in closing strategies from both our experts. Hadrian, to you first. Your top closing call.
Yeah, I'll go with the Bajaj Finance because the stock is, if you see the way it hit its all-time high of 1967 in mid-October, since then the stock has almost corrected over 250, 300 points, and which is rare as far as the Bajaj Finance is concerned. So I think this dip is definitely a good opportunity to accumulate Bajaj Finance at these levels. One can play for a short-term target of close to 1840, 1845, whereas you can keep a stop loss closer to the 1750 zone on the downside.
Kunal, what about you? Your top call?
Well, at the moment, I kind of like Arvind. I think the stock is broken out above 450, and the next resistance, I think, is at around 500. So there's a very substantial up move to be had here. So with a stop loss at 450, I think Arvind can be bought at the current levels.
Okay, both of these stocks have been doing rather well. Bajaj Finance, I remember, from those low levels has started picking up. The last 4 or 5 sessions, I think it's doing well. Arvind, to 3 or 4 days now. So both of these stocks, which are the trading calls from our experts, seem to be doing well, not just today, but over the course of the last few days.
After a decent correction, several of these, larger mid caps to large cap, these stocks which are kind of graduating or have graduated, which are actually the key favorites of local mutual funds and HNIs, they've started to move up again. Look at TTK Prestige, by the way. That's one stock which moved up in last 15 minutes or so by around 9%. It was all flat, and sudden spike that you can see, 23,000 shares traded overall, but since stock is quoting above 8,000, I would say this is a decent volume. Maybe PVR is one you talked about. That is also moving up. NCC has moved up by around 2%. You have BASF India moving up by around 2%. Fortis Healthcare also moving up. So interestingly, although Nifty and Sensex are correcting, but if you look at the mid cap and small cap, there is last minute buying with decent volume. So traders are not really selling. There is more activity on the buy side, maybe outside the index names, so to say. And we got two bullish calls from our experts as well. So that's really the story now.
I just want to mark Astron Paper. There might be a few retail investors who are watching this right now wondering they should subscribe to the Astron Paper IPO or no. It's been subscribed 68 times on both exchanges. It's a small IPO, 70 crores, but subscribed 68 times, and which is pretty large. Yes, it's a tiny IPO, and therefore the subscription numbers might look elevated, but it needs demand of this nature for, well, maybe there should be excitement in the stock. Paper as a space has been doing rather well. A touch of paper names have done well, but Astron Paper getting good subscription. Siddharth, have you guys come out with any notes on Astron Paper?
No, we have not come out with any note on Astron Paper. Yes, overall paper industry looks very interesting after the news which came out from China regarding the waste paper and its processing. So of course the Indian companies are natural beneficiary companies like JK Paper or West Coast Paper for that matter is very beneficiary with a medium to long term perspective. And overall the paper industry had been sluggish. So now next 6 to 12 months seems to be paper industry would be really making good profits, and we can see the volumes going up maybe 30-40% for all these companies.
Okay, but you've got the jewelry pack. Among that, Renaissance Jewelry has touched its fresh 52-week high, and yesterday we saw Titan touching its all-time high levels. Renaissance Jewelry is currently trading with gains of almost 15%. Let's also check what PC Jewelers has been doing. That's another counter which has been really active in the past few sessions. Okay, not doing much. In fact, today it's almost at day's low. PC Jewelers down 1.2%. Siddharth, anything in this space that you like? Titan's been doing pretty well. The financials have been good in the past 2 to 3 quarters. If you had to bet on one jewelry company, which one would that be?
Well, that would be TBZ. I would say that TBZ has been doing good in terms of their business. They have changed their model also from hub and spoke model. Now they are getting into franchisee model also. Of course, Titan and PC Jewelers both are really doing good. PC Jewelers has their own capacities. They have acquired also. They're strengthening their capacities. Overall margins are improving for the company. In fact, the SSG also improving for PC Jewelers. But if you look at a niche play, if someone wants to look at for growth, I think TBZ looks very interesting. Their TVCs are also very, very popular now, and the season is very strong. So overall, in terms of market cap is concerned, TBZ looks very interesting in the jewelry space.
Okay, TBZ is the most interesting stock here. Hedrin, if you have had a look at some of the commodity names, stocks like Vedanta or even Tata Steel, they have been doing well. Today we saw Tata Steel correcting after the corporate announcement. Any call here? I think GMDC is one stock that I have spotted falling in last minutes.
I think Tata Steel, the way it broke out 2 days back from this consolidation phase, it has actually, today's correction has actually has got that breakout to go completely void. I think one should be a little cautious on Tata Steel because a breakdown from that breakout zone that we saw has actually reversed the overall trend for Tata Steel. So I think in the short term one should be a little cautious on Tata Steel, although there are multiple support zones coming forward, because one is the 50-day moving average that is coming close to the 690 zone for Tata Steel, and also the 21 DMA is not too far away. So cautious should be the short-term strategy, but one should not go ahead and short sell Tata Steel at all, because multiple support zones can actually act pretty strongly for the stock going forward.
And the underperformer in this space, SAIL, that is Steel Authority, that's the counter which has been outperforming in the last 3 months at least. In fact, in today's trade as well, SAIL and JSW Steel, both these counters have seen some gains coming about. SAIL is up almost 2%. Well, it's time for us to wrap the markets, and it was just an opening chair, Neeraj, when we touched all-time high levels. There was a pullback seen, and I guess we're closing almost a day's low now.
Yeah, I'm sure you guys will talk a lot more about it as well, Navneet. But yeah, it is a bit of a disappointing close, more so for the banks, down about 0.5%. And I don't think the broader markets would have fared too well either. From the levels that they started off at, I'm sure the mid caps and the small caps have come off too, though marginally in the green, more so the small cap space about 1/3%. But what's moving up and what's gone off? Tata Motors, DVR, Larsen & Toubro, ONGC are amongst stocks which have done well. IT has not done too badly, so you've seen stocks like Wipro and Infosys doing okay. But that's about the list of gainers. Now, if you take the space down to the losers, Dr. Reddy, Bharti, Mahindra & Mahindra, HDFC Bank, I think the HDFC twins have not done too well, and that's a bit of a disappointment. And somewhere down the bottom grid is also Reliance Industries, which has corrected about 0.5%. So a few heavyweights really proving to be a bit of a drag on the large cap space. But what about the mid caps, Navneet?
Well, good day for the Anil Ambani group companies. I want to start off with Reliance Communication. That stock saw a sudden surge in the second half of the trading session. In fact, at one point of time, it was up almost 38 to 40%. But finally, I guess, closing with 34% gains at levels of about 17. And the rub-off effect was seen on the other companies as well. So Reliance Naval also saw substantial gains. That stock closed with gains of over 9%. Besides that, Morepen Lab did pretty well in today's trade after the company got an approval from US FDA for one of the generic drugs. So locked in upper circuit with gains of almost 20%. We did speak to the management. They highlighted they expect gross margins of almost 30 to 35% from this product. Canterville Retail is one of the stocks which has been pretty active actually in the past few sessions. If you look at it today also, it was up almost 14%, closing around the levels of 127. The mid-cap cement companies came in focus in the second half of the session. So you had Ramco Cement, which is also in the futures and options space, one of the top F&O securities in today's trade, 15% higher there. And even India Cement surged. The rub-off effect was seen there as well. So that stock was up almost 4% in trade. From the Realty pack, the Nifty Realty Index was your top sectoral gainer. And the top gainers there were HTIL as well as DLF. So these two stocks closed the day with gains of between 5 to 6%. Jain Irrigation, second straight day of good gains. In fact, the stock also touched its fresh 52-week high, so up almost 4%. The media pack was the other one which did well. So stocks like TV18 Broadcast as well as PVR saw a good amount of gains in today's trading session. Pradeep.
So let's look at some of the key drivers for Nifty in today's trade and figure out which stocks were really helping and which were dragging the markets down. So we had ICICI Bank, Infosys, L&T and HUL to some extent contributing on the positive side. Interestingly, on the negative side, also we have 3 banks. So the 4 private sector banks that carry a lot of weightage, 3 out of them were on the negative side. But that's not all. In fact, the PSU banks were also kind of working on sentiment. So if you look at the PSU bank index, that remained weak because PNB opened lower after the QIP stocks hit the market today. And after that came the news about Bank of India in last minute of trade. So that also played a key role in the movement today. Bank of India cracked towards the end and it took the banking sector down. Along with that, Nifty Bank finally closing lower by 150 points or so. But interestingly, you'll see a completely different picture if you look at the mid-cap index. So Nifty Mid-Cap 100 Free Float Index, the one that we track, has already hit a fresh high. Yesterday, it moved on to hit a new high today and is going to end the day very close to the day's high. And that is the reason, if you look at the market breadth overall, maybe when you look at Nifty, the market breadth doesn't look that great. But if you look at the overall market, even towards the end today, we had 3 stock advancing for every 2 decliners. So net, the market breadth outside Nifty looks good, while within Nifty or Sensex, if you look at it, there are more losers than gainers, and you can see it now. Almost 60% stocks were down. Although since morning, the breadth of Nifty stocks has remained more or less 50-50 or slightly under pressure. But towards the end, we saw there are more losers than gainers. So action was more outside the index than within the index, one would say. And if you look at the overall action today in the markets, where the turnover reached amidst all this volatility during the day. Finally, we end the day at 7,75,000. If you look at the cash market though, 34, almost 39, 40,000. That is, turnover is really on the higher side, Navneet, I would say, in today's trade if you look at the cash market action.
The cash market turnover is definitely on the higher side, and for the F&O, I'll call it, it's above the average. Usually we get to see 5 to 6 lakh crore of turnover on an average basis in the futures and options market. All right, then let's get some closing thoughts. Siddharth, what would be the top themes, or if you want to share some stocks with us that according to you will outperform in 2018?
Well, in terms of 2018 is concerned, the auto ancillary pack seems to be outperforming. I would say auto ancillary, Jamna Auto looks very interesting. We believe that commercial vehicle is on the move. Turnaround story, if you look at the commercial vehicle OEM sales numbers on a month-on-month basis, looks very interesting. So overall, we believe that auto ancillary pack has a strong potential for 2018, and that stock will be Jamna Auto with a target of 95.
Okay, so Siddharth likes Jamna Auto going into 2018, and the stock this year too has done pretty well. Well, on that note, we'll call it a wrap on this edition of Countdown. Thanks very much for watching the show. I'd also like to thank all our three guests, Siddharth, Hadrian, as well as Kunal. Appreciate three of you joining us today and giving us your views on the markets. Don't go anywhere. Coming up next is the Mutual Fund Show, so stay tuned to Bloomberg Quint Live.